Hi, this is PR Sundar. Welcome to this special episode. We are going to discuss about the story of Jane Street and its impact in stock market. Number one, the week before last week, the Friday, the Jane Street was banned from trading in India. But just 1 week later, the SEBI has come out with a report saying that the futures and options volume has come down by 21% in just 1 week time. And moreover, now the volume is about the lowest in the last 18 months or 24 months. So definitely the interest in futures and options is coming down in India. So that is one thing. Now, the major thing is that, the SEBI says still last year, 91% of the people have lost the money. And before that, they came out with the report saying that 93% lost the money. Another 6%, they barely made money to cover their charges. So effectively only 1% making the profit. And now they are saying that about 91% losing the money. But this time, the average loss per user is more than the last time. So that means, very small people are out. Slightly bigger people are staying here and losing more money in markets. Now, first let us talk about the Jane Street. What has happened, sometimes before I conducted a conference in Cochin, so one person from Tamil Nadu attended that conference. So in the conference, I said, some ultra HNI people, so what they do, they sell far out of the money options, typically trading at 1 rupee, right? So this guy is actually having shares worth more than 1,000 crore. So you'll have 1,200, 1,300 crore. Even after the haircut, the value will be around 1,000 crore. And he sell far out of the money. Means like the farthest option. You sell a call option, it may be even trading at 1 rupee in weekly options. 99.9999% of the time that will go to zero. But very, very rarely, what has happened, Nirmala Sitharaman candle. So that day that 1 rupee option went to 60, 70 rupees. And of course, you can always put a stop loss. Sell at 1 rupee, even if you put a stop loss at 5 rupees, okay, the probability of that 5 rupees stop loss hit is less than 0.0001%, something like Nirmala Sitharaman candle, which happens once in 10 years like that. Other than that, you are very safe and you will make that money. So I said what ultra HNI people do, they sell one call option at 1 rupee, they sell a put option for 1 rupee. And then somebody having a capital of about 100 crore. I'm talking about the 100 crore trading limit after the haircut. So typically by selling 1 rupee call option, they can collect about 8 lakh rupees per week. And selling put option, they can collect another 8 lakh rupees. So 8 lakh plus 8 lakh is 16 lakh rupees per week. So that translates into 64 lakhs per annum, per month. That's a fantastic money. And the people can say, sir, 100 crore, 64 lakhs is only 0.64%. Right? And I'm just giving an example. Okay, you bought a piece of land. Okay, why you buy the land? Because you are expecting the land prices to go up and that is going up. So you are very happy. It's a very empty land. And one day, one tourist operator come, he tells you, sir, I've got 10 cars with me, taxis. Nighttime, I don't have a place to keep those cars. Okay, can you please give me that land? Can I park my cars in the land? I will give you some rental. And are you going to say, my land value is 100 crore. So because of that, you give me 10 crore per month as the rental return or 1 crore. You're not going to ask. Because the land you bought, so the land is appreciating. So the land is yours. You are very happy. And then right now, even you don't agree to this taxi operator's proposal, you are not going to get anything. You are only going to get the land appreciation. But this taxis, you allow them to park their cars in the night time here. Okay, like even if you get 1 lakh rupees per month, right? You can't say, so sir, my investment is 100 crore, I'm getting only 1 lakh rupees. No, that's not the question. That 100 crore, you did not invest in order to get this 1 lakh. That 100 crore you invested, that is going to go to 200 crore, 3. So the same way, these people have bought the shares. So one of my friends who bought shares for 5 lakh rupees, 10 lakh rupees, and now it is about 1,300 crore. Okay. And he is very happy. So the share investment is making the money. And most of the people who invest the money in shares, they are only getting the sharing, appreciation only. By pledging that if you are trading, okay, whatever option market you are getting the money, that is an extra money. You cannot calculate the rate of return or return on investment. Return on investment is okay, but it's not a rate of return. So that's why in my first media interview, I said the rate of return for option sellers is always infinity, because they don't put any capital. All their capital either in bank FD or in equity collateral or debt mutual funds. So my primary business is not trading. My primary business is putting the money in debt mutual funds or equity market or FD. So there I'm getting the return. All the people who put the money in FD, they only get the FD return. I also put my money in FD, I'm also getting FD return. It's the same. But in addition to that, by pledging those FD and I'm getting the limit, I'm trading in stock market. Even if I get 1 rupee, that's a very big money for me. So a person getting 64 lakh rupees per month, based on a capital of 100 CR, that's a very big money. So in fact, the guy who attended my conference is actually having more than 1,000 crore. And after learning from me, so he went to trade in markets. But initially he was not confident. So he put some small money at 10 crore, 20 crore like that. Okay. I think the story I said last week also. And at some point of time, he got into some trouble. So this guy is a genuine guy. He's an ultra low risk taker. Okay. The SEBI regulation has come into the picture and he got into the trouble. So because the SEBI rule says that you cannot short the market for more than 500 CR, right? But had he sold the put option also, that problem would have been solved, so that we discussed last week. Okay. Now, there is a clear-cut instruction to say that you cannot short the market for more than 500 CR. That is on a positional basis. I think for intraday basis also, they have certain limits. Now, when there are such rules, how come this Jane Street could buy the options and sell the options for 45,000 crore? And then how can they long or short futures for 5,000 crore? So here the problem is that the SEBI has no clear direction. And so somebody is selling a call option, right? It's considered to be short. And then they go and buy a put option, right? So they are considered to be long. Or buying a put option is also considered to be short only. So when the Jane Street sold the call option, bought the put option, the total value should have been more than that. Probably what Jane Street could have done to bypass this rule, they floated different entities. So as per SEBI report, they had 4 entities in India. Now, the question is, whatever the SEBI rules, the limit, okay, that should not apply to each entity. That should apply to the overall ultimate beneficiary owner. So let me give you an example. So our stock market is a funny thing. Last week also I said there are so many discrepancies. Okay, if I am a sub-broker to one broker, then I cannot become a sub-broker to another broker. Forget about it. My company is sub-broker with one broker. Then I cannot become a sub-broker with another broker. Because my company is sub-broker with one broker, okay, but the ultimate beneficiary owner of the company is me. I'm one of the directors. So this company as well as all the directors of the company can never become a sub-broker with another broker. So let us say, the SEBI come out with a rule like you cannot long or short more than, let us say, 5,000 crore. That should apply to the overall level. But, tomorrow I can float 10 entities. I can float 10 companies, each company 5,000 crore. Then I can play with 50,000 crore. Then what is the point of putting the limit? So that actually defeats the purpose. Right? So, there is a way. Without knowing this rule, actually once I applied to become a sub-broker. Right? Actually, it was rejected by NSE, saying that, okay, your name is here, your PAN number is this, same number, PAN number is associated with another company, that company is already a sub-broker, so you cannot become. So, Gen Street ultimate beneficiary owner will be only one person. They can float any number of entities, but the ultimate beneficiary owner will be one person or one entity. Then how that was allowed? So that is one thing. The second thing, the job of the regulator, last week also I discussed, is to find out the mistakes, to remove those mistakes so that the stock market grows in a healthy way. Just because, some people are losing, they can just go and ban everything, blanket ban, they keep increasing the margin money, they keep, putting pressures on the option sellers. So that's not going to give a good effect actually. And I tell you, once again, and all this data so far SEBI has released, it is the overall data. We don't have the data for the option buyer separately and option seller separately. Right? So, are the people the capital? Of course, how many people, there is a news I read somewhere, the average trading capital of the traders in India is only 3 lakh rupees. But selling one lot of call option and put option already, the margin is around 2 lakh rupees. So, which shows that most of the people, they are option buyers. They are not option sellers. So now you put so much pressure on option sellers, let us say half of the option sellers are out. Then the demand from option buyers is very high, but option sellers supply is very less. So that will increase the premium. So ultimately, that's going to affect the option buyers. So now the many questions people ask, and is there any rule that says that if you buy an option, you sell an option, or then you go long or short in future, that is considered to be manipulation? So where is the exact definition? And so, like if somebody, I heard in US, even at 1 second, you just go and place a big order, the order will not go to the exchange. The exchange will break that into many components and will send it to the system slowly. This is to avoid the manipulation. Because somebody, like, why should somebody come and sell 5,000 crore worth of shares in just 1 second? Right. So then a exchange can stop it, can exert maybe every 10 seconds, 100 crore orders going, then there's no problem. So, in just exactly in 1 second at the same time, for what amount people can sell, that will not be considered as a manipulation. Okay. Now, if they have a certain position in options, okay, what percentage of that position they can sell or buy in futures? So we need exact definition. So what is that definition exactly? So what is the amount? So that is one thing. Second thing, as per SEBI report, Jane Street seems to have manipulated only the Bank Nifty. Why? It's very, very easy to manipulate Bank Nifty because, if I'm not wrong, HDFC Bank, ICICI Bank, Axis Bank, and State Bank. There are only 12 stocks in index right now. Now they are going to increase it to 14 stocks. But right now there are only 12 stocks. Out of those 12 stocks, these 4 stocks, the weightage is around 80%. HDFC Bank weightage alone is 30%. HDFC Bank and ICICI Bank together, it has 50% weightage. So you just go and buy a big buy order for 1000 crore, 500 crore in HDFC Bank and 500 crore in ICICI Bank. You know, the bank nifty can shoot up. Or vice versa. You put a 1000 crore sell order in HDFC Bank and ICICI Bank, market can fall. So this is how the manipulation become very, very easy. The broader the indices, so it's very difficult to manipulate. So that's why I always feel that, you know, an index should have at least 15 stocks, number one. I think now they are coming close. You know, they are making it 14 stocks. And number two, none of the stock should have more than 10% weightage. 30% weightage, you know, so that makes, you know, the index easy manipulation. And one thing is very clear. This is a purely speculative market. Now, IT stocks are there, IT index is there, but IT options are there. Nobody seems to be trading in IT index, futures or options. How come only the bank nifty is like this? So that's mainly because, you know, the huge weightage for HDFC Bank, and it is easy to manipulate the banking stocks. So, in summary, number one, SEBI should come out with a clear guideline, you know, for how much money they should go long or short. So what should be the proportion between options market and future market? And then, you know, at one point of time, somebody playing 4,000, 5,000 crore sell order, buy order, exchange should not accept it. So exchanges should, you know, break them into like 100 crore each, then giving it to the system slowly. And then whatever the limit set by SEBI should not be for each entity, it should be for the ultimate beneficiary owner. So if Jane Street has 5 entities, for all the 5 entities put together, the limit should apply, and not for each entity. So these are all some of the suggestions, so we are putting forth. And then by seeing this 91% people loss, you know, like all the people, you know, in India, you know, if anything happens, you know, people will come, oh, no, we are the saviors of retail people. No, it should be banned, you know, and they talk all kinds of things, right? Banning is not a solution to any problem. Say, for example, liquor. So you ban the liquor, illicit liquor will flourish. The same thing, you ban in the stock market, you know, then in the dabba trading will pick up, right? So therefore, banning anything is not a solution. Everyone who is in the stock market, they are adult, 18 plus, they know what is right and what is wrong, right? The job of the government is to give a good education, and after getting the good education, if he becomes an adult, if he is drinking or smoking or playing an options market or buying a lottery ticket, so that is for his choice. I think as a regulator, one should not get into the losses, right? If that is the case, you know, you have to close down the exchanges, right? You just take a survey, even in cash market, how many people make profit, right? How many people make profit by smoking, or how many people make profit by drinking? So you know, you have to stop it. So what regulator can do, in fact, in my previous videos also I suggested this, you know, there are many people who are coming here just by listening to other people. And, you know, every day I get at least 5 to 6 calls. Sir, we are giving advisory. What advisory give? We will tell you which option to buy. So you buy this option for 5 rupees, target 10 rupees, stop loss 2 rupees, you know, without even understanding what is the risk and reward they are coming. The worst thing is that people are giving money to other people to handle their money. Right? So there are so many scams we are doing. So how all these things can be avoided? Very simple. in many countries, so they conduct some examinations. So they check whether you know all the risk and reward, and then you are allowed. Say for example, if my PAN card is there, my Aadhaar card is there, if I'm supposed to write the exam, if I pass the exam, then I have the required knowledge, then I can come. Right? If you do like this, the people who are taking money from others, they will be stopped. You want to go and take a money from a villager. Okay, there was a story last time. One Karnataka-based farmer lost 21 lakh, something like that. How can a person go to the farmer? Okay, give me money, I will manage. All right. But then that farmer has to pass the examination. Otherwise, a trading account cannot be opened in his name. If, of course, after that, he can hand over the money to this guy, that's a different story. But that mostly people will not do. So, you have to educate the people what is right and what is wrong, what is the risk and what is reward. And you have to ensure whether they have the enough knowledge to play in the market, to come to the market. So that can be the right solution rather than putting a blanket ban. And moreover, most importantly, next time when the SEBI conducts the survey, they should, ask this question: are you a buyer or seller? Out of the option sellers, what percentage of people have lost money? Out of the option buyers, what percentage of people have lost the money? So if my guess is right, out of the 91% people who lost money, maybe 90% may be option buyers, maybe 1% may be option sellers. Now, this is my gut feeling. I do not know. I do not have the data to support this. So therefore, all the restrictions are coming to option sellers. They increase the margin money, and then, on expiry day, they increase further. You trade for more than 9 months option, increase the margin money. Then, for calendar spreads on expiry day, there is no margin benefit. So all the troubles are given only to option sellers. So what will happen slowly? Many option sellers will get out of the market. Then there will be only few option sellers. Then there will be more option buyers. So that is even worse. So the option buyers will tend to lose even more money. So in fact, between the last survey of SEBI and this survey of SEBI, okay, average loss for the people have lost is more. If I'm not wrong, because of the restrictions by the SEBI, the margin money increase and other things, so option premiums have shot up. So they are paying more money to buy the options, and therefore they are losing the more money. Right? So next time, the SEBI also should consider releasing this data separately for option buyers and option sellers. So these are all our suggestions. So let us see if anything improves in our market. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.